I want to start by welcoming you all to Farm Credit Illinois' Ag Minded Hour webinar series. The intent of this series is to offer timely topics and information that are easily digestible over the noon hour, a little food for thought as you go about your day. Before we dive into this topic, I just want to take a moment to, again, thank you for being here, but then also introduce our presenter for this hour. Kent Reid is our chief appraiser here at Farm Credit Illinois. He has been a certified appraiser for well over 30 years and with Farm Credit Illinois for 15 of those. He is based out of our Lawrenceville office and manages the appraisal team as well as the annual land values benchmark study that we're going to hear about today. I'm sure you will all take a ton of great information away from Kent today. But before I hand it over to him, I just want to point out a couple of things that you'll see on your screen in front of you. The little box in the corner of this slide shows you what the control panel looks like for you. If you click on that question box, you're able to type in your questions. So your microphone will be muted throughout the program, but feel free to use the question box and we will get back to you if it's something you just need a quick reply to, or we will toss some questions to Kent at the end of the program. So without further ado, I will hand it over to you, Kent.
All right. Well, thank you, Caitlin. I appreciate that. Welcome, everyone. So, like Caitlin was saying, I've been a farm appraiser for a lot of years. Kind of want to explain the process of what we do annually on this benchmark update. So, as you'll see, this map is the 22 benchmark farms we have that are throughout the Farm Credit Illinois 60 county territory. As you can see, there's a representation of different types of farms, different locations, and so we do this update. And I want to reiterate that this is from July of 24 to July of 25. So this update is July to July. You might have seen some updates here lately on different sources that talked about land values being stable. A lot of that information was from January of 25 to July of 25. So our benchmark is actually from a full year. So that's what these results will show you. As you can see, the farms throughout the territory, we basically class them by land class. And the way we do that is the productivity index of the soils. So when I'm talking Class A farms, we're talking a farm with a PI of 133 or greater. We've got B farms in this also. That PI is 117 to 132. And then the C farms are going to be 116 down to 100 PI farms. So that kind of gives you an idea of what we're doing there and when we're describing these farms. So that's kind of where we are. If you can see the map, you can see on there in this July to July study that there is some red numbers. Nothing earth-shaking, but there has been a softening. You can kind of see a pattern from that map that the central to northern part of our territory has a lot more red than the southern part of the territory, and we'll kind of go into those as we go forward. So, Caitlin, if you'll go to the next slide. And so here are the 22 benchmark farms. These are the same farms we revalue every year. And so you can see there's several A farms, the B farms, and then there's two distinctions on those C farms. There's C North farms. So if you can consider our territory, kind of think of it as Interstate 70 North would be our C North farms, and then south of Interstate 70 is going to be the C South farms. So, and as you can see, if you go back to the day of real estate classes that I went through many, many years ago, it's all about location. The three things about real estate were location, location, and location. You're definitely going to see this. Farm real estate in our territory is very specific to that location. And so one location may be completely different. There may be different things that influence that market. Some areas are more closely held. So when something does come up, it does, it is more expensive. So there's lots of trends and lots of things that it all goes back to location. But as you can see there, there's several red, but yet there are several benchmarks that went up. And if you just happen to glance down to that Jackson County farm there in the C South farms, you're going to see it's up 27%, and the Massac was up 12.5%. We will explain that as we go through the presentation, because that's really not just a 1 year increase. So, but that's kind of, if you looked at overall, if you just go back 1 second, okay, perfect. If you looked at the 2025 values versus the 2024 values, how I look at that is if you own that portfolio of all the benchmark farms, in 2024, it was going to be worth $13,463. In 2025, that same portfolio of real estate went down to $12,869. So that's kind of how I figure the annual percentage change. Overall, we're looking at down 4.41%. But again, like I said, individually, you have a mixed result. So, all right, Caitlin, we'll go to the next one. All right, so these are our A farms. They're central Illinois, the northern part of our counties. And, you can see over the years, if you time, back in 2014, we hit a peak of our market. And then in 2015, you can see on the far side of the screen, land values pretty well stabilized from 14 to 15. Then we look at 16, 17, 18 into 19, you can see the red numbers, the values started to decline a little bit. And that was pretty well across the board in all of our land classes. But in general, that 3-4 year decline was about a 15% decline overall. Then you can see 2020 values, you see a lot of red in there, or a lot of green, I'm sorry, from 2020 all the way to 2024. 2022 was a year that I believe our overall, the benchmarks went up over 20%. That was a very strong year. And then 24, we were up a little bit more. But you can see here that the 2025 values, and this is cropland A, so this is the Class A soils in central Illinois, all had a little bit of decline from 2% almost to 11. And then you can see that the dollars per acre, you're still looking at an average of right at $17,000 an acre. So it is off a little bit. It did soften a little bit, but overall, not anything too major. If you just looked at the simple average, it's 8.5% decline on our Class A farms. So let's go to Class B. Again, more in central Illinois. You can see Vermilion, Coles, St. Clair, Champaign, Montgomery counties. Again, pretty consistent. We did have one St. Clair County one that was up a little bit, but now do understand St. Clair does have, some transitional influence and that Metro East influence. So that's kind of the reasoning in that farm. But the other Class B farms, really consistent, 6.92, 5.81, 4.86, so right around that 5% softening. Again, average value. Average is probably a little different there in the 15,420, but the St. Clair County farm was at 22,000 an acre. If you look at the others, 12, 14, 13, you're around $14,000 average probably. So that kind of gives you an idea. And again, if you looked at, 2014 being the high of the market, 2015, you can see the values there kind of stabilized. Then you had some decline, 2016, 17, 18, and then 2020, 21, 22, all the increases up to even last year, they were all up. So overall, nothing surprising here, but the beef farms are showing about 5% decline in value from year to year. All right, so let's talk the cropland C. So these are 100 to 116 PI farms. One we've got in Iroquois County, Greene County, Morgan County, and pretty consistent. Now you had the Iroquois County one up just a little bit, and then the Greene and Morgan County farms were down just a little bit. So there is a little inconsistency, I would say, in that market. But again, it goes back to where is it located? What market area are you in? And so there's going to be some differences from area to area. But overall, kind of averaged 8,700, 9,500, 11,500. So you're right around that $10,000 an acre, and overall off a little bit, 5%. So then we'll go to the cropland C in the southern part of the territory. Again, we're looking here at south of Interstate 70. You do have two that are pushing Interstate 70 up there. The last two on the list, Fayette and Effingham County. But just a general representation of the Southern Illinois area. Again, it follows the same trend. 15 kind of after the peak in 14. Then you have, some steady, you have some red numbers there in 16, 17, 18, 19, even into 20. And again, then numbers going up from there up to 24. Now here in the South, there's definitely a mix of what's going on. I mean, you had a couple, the Fayette and Effingham down just a touch, right around 5% on both of those. But if you look at those farms, they're still averaging 13.4, 13.2 an acre. You have some farms that are showing up a little bit. And then we'll talk the Massac and Jackson County, especially the Jackson County farm. If you look at that chart, you can see that value had not changed since 2021. It had been the same over the last 4 years. And basically that's in an area of very closely held land. Therefore, there just weren't any laws to prove one way or the other. There were several transactions in the last year. And so that 27% increase in value is really not an annual increase. That's over a time frame period. And you can even see in Massac, it was very similar from 19 to 20, 21, not up a lot in 22 and 23, and up just a little bit more in 24. So those kind of trends are over a longer period of time. It's just you only have sales when they exist, and so those are the reasonings for some of the differences in the larger increases in value. Okay, let's go to the next slide. So again, as we've done this benchmark study, for years upon years using these same farms. And therefore it gives you a really good historical look at what farmland has done over a time frame. In this chart, again, each class of farm being separated, but you can see the trend, whether it's an A farm or a C farm in the South, is very similar. And these values go back to the year of 2000. And you can see in that 26-year period, from 2000, the A farms were averaging a little over $3,000 an acre. You can see the peak in 2014. You can see a gentle decline over those years. And then you can see 21, 22, the 22 being a big year of land value increases, kind of gently going up. And then, this kind of being the first year of some decline with the A farms, the B, the C North, and then C South is again a mix, but on average went up just a little bit. You know, as I've done this as a chief appraiser, I've been chief appraiser for about 13 years here, and there's one trend that has always amazed me is typically farm values, whether they're going up or whether they're going down, the trend seems to start in the central part of our territory, either direction. And that's kind of what we're seeing here again this year. The values have decreased a little bit in the northern central part of our territory. They've still increased a little bit in the south. I've seen that on the downward side where they'll adjust central Illinois first, southern Illinois probably a year later. So don't have any scientific evidence of why that is. It's just, it seems to be a trend that we've observed in the past. So, but that kind of gives you an idea of, you know, as we talk about land, it's a long-term investment. It's a long-term asset. And so it's not an asset you get in and get out back and forth. You know, they're held for many years. And you can see if you bought a farm in 2000, July of 2000, it's been a great investment over those many years. Has there been ups and downs in it? There has, but if you look at the long-term trend, you can see that it's been a very good investment. Go to the next slide. Again, so we have some benchmarks that we have records of going all the way back into sometimes into the 60s. This slide shows you a couple of A farms in Morgan and Greene County and a C farm in Fayette County, and what they've done since 1974. And I mean, you can look in 1974, those A farms were basically about $2,000 an acre. You can see as they went up, they got almost to $4,000 an acre. And you can see back, unfortunately, in the late 80s, they were down, you know, almost half. But since that time frame, you can see over time what those land values have done. And again, just a little softening of values this year. Okay, let's see what else we got here. All right, this is a chart I like to look at to just see, this is the average corn price from July 1 to June 30th of that same time frame each year. And what does the corn price, how does that correlate with, you know, the value of land? And you can see there's a pretty good correlation of when corn prices go up, overall land values go up. When corn prices start to fall, sometimes that takes a little bit of time, but they continue to follow that trend. And as you can see, 24, 25 average corn price decline, overall decline in value of the farmland. So I think the next slide is kind of the same thing, just showing average farm gross income. And as you know, as gross income goes up, land values will rise. As gross income comes down, you know, obviously the income goes down, or the land values go down with it. So again, it's just not rocket science. We all understand that, but it does show the correlation between the two. So I went through a lot of information there. Hopefully not too fast for you, but in general, if you looked at what we've studied this last year, benchmark values, we had 14 of our 22 benchmarks that went down. We had 6 of those benchmarks that went up, and 2 of those benchmarks were unchanged. So overall, if you're looking at the overall average, we're off about 4.5%. And that follows years of, you know, 2024 overall increase of 7.5%. 23 was 8%, and you know, and again in 27 overall values increased 27%. So that kind of gives you a summary of the last 3, 4 years. We've had a pretty good rise in values, and so a little softening at this point, in the times that we're in, it makes sense. Nothing earth-shattering again, but there is a little bit of decline. So kind of give you the next slide here. There we go. So just to kind of give you an idea of what we showed the peak of 2014 to where we are today. So we're going to say probably 2024 was the next peak, but from 14 to 25, you can look that it is still the land value is up about 35% on average. If you'd owned the portfolio back in 2014, you're looking at an average value of about $9,500 an acre. That same portfolio of land today would be worth $12,781, about a 35% increase. So again, long term, a strong investment. Go to the next slide. So we're going to, here in a minute, we'll open this up for questions. But here's the deal. Here's what I look at from day to day. What is the supply and the demand of farm real estate on our market in our territory? What we've observed over the last couple of years is the supply is down a little bit. The transactions are seem to be fewer numbers of transactions. So I think that's one of the factors that has, kept farmland values where they are. Obviously, we looked at those two slides: corn prices, gross farm income, soybean prices. All of those have an effect. The last year and a half, commodity prices being lower, interest rates being higher, working capital's got a little tighter. Again, probably leading to maybe a little bit of softening. We don't know day to day on the tariffs, the world, the Ukraine and Russia, all those things, in this create interest one way or the other in farmland. Again, interest rates have been, not historically high, but much higher than we had for many years. And then you get into the solar power, the renewable energy things, and where that's heading. All of those things are factors to consider. And therefore, so, land values, I know everybody wants the question answered of, well, where's land values going? Will this softening continue? Will we go up? Should I buy now? Should I buy later? And it's because of all those factors that there's really no solid answer. I wish I had that crystal ball that could tell you that, but I don't. What I'm observing and what the market trends are showing is, could we have some continued softening? Yeah, I think we probably could. But overall, if you just look at it as a long-term asset, you can see over year, it's been a very strong asset. And so as supply has been limited, now if there's a bunch of, farmland that comes onto the market, what will that do this winter? We'll have to look at that. But overall, I think we're looking at, in general, we could soften. But again, it all goes back to location. Certain areas where, there's just a limited supply that are very closely held. All of those things are factors that you have to consider as you look into that next land purchase. Again, there's lots of areas where if that farm comes up for sale, you may never get a chance to buy that again in your lifetime. So those are areas that, land values continue to stay pretty strong. But, as the price of commodities, interest rates, all those things will affect values in the short term. All right, I think that's my last slide, and we can open this up for questions. Again, you'll
Absolutely.
see on the screen my email address. You're more than welcome to email me um, if we don't get your question in the next several minutes. So, Caitlin, what do we have for me now?
Absolutely. We've got a few in, but that'll give everyone a little bit of time if you do have a question to drop it in the box. Um, One thing you kind of touched on supply, and related to that, we had a question about have there been more no sales at auctions this year based on some price decline?
I think we saw that early last winter. Um, and I think it was kind of pre-election, and so we saw a few no sales. I think maybe sellers hadn't adjusted their site to the value of a slight decline. Not seen many no sales overall lately, and that kind of leads back to this study going from July to July versus January to now, January of 25 to now. I think we saw a little more decline. We did an informal benchmark update in January of 25, and I think most of the farms stayed about the same from January to now, and maybe a few actually had gone up if you look January to July. Um, so that's that's what I would say is overall we're there's still a few no sales, but we're not seeing a ton of them right now.
Yeah, kind of adjusting to the market. Um, and you kind of mentioned our previous benchmark study, but how do FCI's numbers compare to other regional and national farmland value studies that are happening in 25?
Sure. Um, just so you know, so all of the farm credit um, companies that are within the agribank district, we all do benchmark studies at the same time. So I've seen several results of, you know, the associations to the north and into Missouri, all of those places. Similar results. The northern Illinois area seemed, I saw those results. They were a little flatter than us. We had a little more decline than they did, but nothing major. I mean, they were pretty flat in their study. Um, Saw the Missouri studies similar to ours, a little bit up, a little bit down. So, I mean, I think overall in general, it's pretty much the same you're seeing throughout the kind of the Corn Belt.
Absolutely, that's helpful. Um, we've got a couple more here, but I do want to encourage you, if you do have any questions, be sure to drop those in so we can get to them. Um, I feel like we continue to kind of see this question pop up as wind and solar become more prevalent in our areas. What effect do wind turbines and solar panels have on farmland and the appraised value?
Yeah, I would say with wind, I mean, wind's been around a lot longer. We've dealt with it a lot longer, and I think people have got more comfortable with the income stream of those of the turbines. Not have never seen any negative value in our area with the wind turbines. Are seeing where they contribute a little bit of value now with the income streams. People feel a little more comfortable with that. Solar is one of those that I wish I had the answer. It's kind of we definitely have activity. We definitely have some solar farms out there that are being built and have been built. We have not seen any effect, I'm going to say overall, either negatively or positively. Um, but it's really one of those that it's too early to tell. We have not seen where there's a solar farm that all of a sudden everything in that area is more expensive, is bringing more money, but we haven't seen it go the opposite way either. So I think with solar, that's one that we're still waiting for market evidence to show us what direction that goes.
Yeah, absolutely. It is so fresh and continues to be a hot button topic. So thank you. Probably the last one that I have for you, unless we get a few more coming in. Um, you talked a little bit about just what your crystal ball is telling you. There's a few questions on, the odds of a 10% or more pullback in the future, or kind of just what it'll do in the next 5 to 10 years. Do you want to shed some light on what your guess is or what your crystal ball is telling you?
Yeah, I wish I knew, but I don't. I can just tell you the trends. If you looked, Central Illinois, those values took a 8% decrease this past year in our area. Um, this, so we've got at least some of that baked into these numbers. I mean, again, overall, it's an average of 4%, 4.5. But if I was looking at this going forward, as I travel our territory, it appears like Central Illinois farms are the crops look pretty good. South of 70, I've seen some really good crops. I've seen some fields not get planted and some poor condition crops. So, with commodity prices, with crop conditions today, I would say if anything, we're going to see a little more. We could see a little more softening, but what we don't know is government programs, is black swan events. All of a sudden we have trade agreements with other countries. What foreign production does, all of those things. It's hard to answer the question. If you look at the trend and the way we're going, I could see a little softening again next year, but that's always up for interpretation and what next event occurs.
Absolutely. It's such a guessing game. What is going to happen in politics currently?
Absolutely.
We did get another one for you. When or how do you expect the addition of pattern tile to affect appraised value? Can it
Yeah.
lead because it was installed, or do you have to wait for increased yields to reflect on the PI? How do you kind of take that into consideration?
I mean, we look at the pattern tile. That's been an appraiser question that we've tried to deal with for many, many years. Obviously, you pattern tile a field and the drainage becomes better. Um, I've had lots of people say, well, what does that contribute to value? And it's a really hard question to answer because you don't know. It's based upon age and the functionality of it. All of these factors. What I've seen is a lot of times these pattern tiled fields, when they're sold, they will bring more money. As far as the PI of the soil, it's not going to affect the U of I rating, but it will affect your production and all of those numbers, positively. So hard question to answer, but typically you would put those pattern tiled sales typically on the higher end of the market.
Absolutely. Very situational. We don't know what location this person is asking their question from, but it says, my observation has been that more marginal ground sold locally has softened in price more so than premium ground. Looking at your charts, the best ground perhaps has softened as well. Do you think this is based on location?
Yes, I do. I would say that's absolutely location. Because if you look at the sea farms in the south, those would be, obviously lesser quality just by soil type and PI numbers. Um, and it's a mixed result. So, typically in a downturn, if there's, if there's a softening, typically your less productive farms, farms that are, irregular in shape, have, are harder to farm. Typically, that's where you're going to see the values decline first, because, obviously, if it's a really good farm in your area, that's probably going to bring more money, and therefore, those marginal farms would soften more. We just haven't seen that yet, but it could be heading that direction. Yes.
Excellent. With some demand increases from investors, how much has CPI followed the land prices over time?
Um, that's not a quote, or not a statistic I've tracked. But I will say this, if you look at, and we analyze sales in our 60 counties, if you look at the average buyer, um, it's still mostly farmers, and if you're looking at investments, a lot of local investment, um, businessmen in the area that have ties to the area. Um, so buyers typically, I still say it's a majority of farmers and local investors.
Awesome. Well, that is all that we have for questions. So I think you might be off the hook. We peppered you quite a bit. So thanks for telling us what you know and also what is to be determined by the market in the coming months and years.
Yeah, we'll
Um,
see what next year in August of 25 has for us.
yes, absolutely. And
Or
if we all knew
26.
the answer to
Yeah,
that,
26.
yep, sorry about that. I interrupted you a little bit. Um, Great. Well, thank you again, Kent, for all of your knowledge. And if you do have questions, I'll switch back to Kent's email really quickly. Feel free to shoot him an email and follow up with any questions that you might have or that we didn't get answered if we happen to miss any here today. So thanks again. As we wrap up, we just hope that you all left with some tidbits of knowledge as you spent a little bit of time here with us over your lunch hours. So the final few announcements as we close out today is that this webinar will be recorded or was recorded and will be shared along with the slides on farmcreditil.com/watch. So if you have a need to look back at those or share them out with any friends, feel free to do so. That is where you can locate that. It will be posted about 24 hours from now, so be on the lookout for that. And then when you close out of the webinar today, a brief 3-question survey will pop up. If you could take a few moments to complete that, it just really helps us make sure that we're providing value to you and tells us what you want to hear and how we can improve the experience for you. So thank you for taking a little bit of time with us today. And also thanks again, Kent, for sharing your expertise. And I hope you all have a great afternoon.
Thank you.